Hi, I'm Ron Zalben. I'm a US and Israeli CPA. I immigrated to Israel about 22 years ago, and today I'd like to discuss with you issues that you have to deal with when you're going to retire. In the agenda, we're going to understand US taxation on retirement and also Israeli taxation on retirement, and also some other basic ideas that we're going to deal with, for example, Social Security, which is not exactly an income tax. The assumption I have is the taxpayers are US citizens and Israeli residents and are not new immigrants that have a 10-year exemption. First issue I want to discuss with you is severance pay. In general, when somebody works here in Israel, they are entitled to 1 month of severance pay for each year they've worked. In Israel, you're taxed on the severance pay, or you could be exempt on the severance pay. It's your choice. If you decide that you're going to be exempt on the severance pay, it may impact your taxation on your Israeli pension. In the US, that severance pay is going to be considered fully taxable on your US tax return. The second issue I want to talk to you about is the taxation of your Israeli pension, both in Israel and in the United States. In Israel, either the full amount of your pension will be taxable, or part of that will be taxable depending on your situation. On your US return, your Israeli pension is taxable, and how much of it is taxable depends on your situation. All of your contributions to the pension are considered non-taxable on the US return. If you reported employer growth and employer contributions on previous US returns, that is also considered non-taxable. One thing that you should note is for the foreign earned income exclusion, you cannot exclude pensions. It is only wages and self-employment income. Third issue I want to speak to you about is not a taxation issue, but rather it has to do with Social Security and when you qualify for receiving Social Security benefits. There are 3 times you can take out Social Security when you're eligible. The first is when you're age 62. And you'll get reduced benefits. But if you work more than 45 hours a month, the Social Security Administration may eliminate your benefits completely. This is different than if you live in the United States. If you live abroad, it's 45 hours a month. And if you do work less than that, you probably will need a letter from your employer to verify that you work less hours. The second stage that you can take out Social Security benefits is quote-unquote full retirement age. For those born between 1960 and after, age 67 is the full retirement age. For those prior to 1960, there is a link that I'm going to give you that shows your full retirement age. The last possibility is age 70. You get increased benefits, and those benefits will go up a decent amount if you wait between full retirement age and age 70. After age 70, they won't increase any more than that. The next issue I want to talk to you about is Social Security, but it's in a different light. There's a new law that was signed into effect in early January 2025 that canceled the previous law that in the past eliminated people who live in Israel and other places, also abroad, under WEP, windfall elimination provision, where they could get up to half of their Social Security benefits eliminated because they received a foreign pension. The old law canceled those benefits up to half, but now this new law applies only up till December 2023. In 2024, under the old law, people's Social Security benefits were eliminated up to half. Now, what the Social Security Administration is saying is people should wait, and they will receive a refund for the cancellation of their 2024 benefits, and they should not contact Social Security. That is what they have posted on their website. Let's talk about the old law, which was in effect up till December 2023. Social Security would ask you when you would apply for Social Security benefits if you were receiving a foreign pension. If you were receiving a foreign pension and you did not have enough credits or enough paid in, they could cancel your benefits up to half or I should say eliminate your benefits up to half. And every 2 years, they would send a questionnaire to people receiving Social Security, asking them if they had started receiving a federal pension. They were very keen in doing this and very good at this. People who had more than 30 years of substantial earnings, and I'll show you what substantial earnings are on this next slide, would not have their benefits canceled. If people had substantial earnings between 20 and 29 years, would have benefits reduced, but not fully reduced. And there was a calculator on the Social Security website in order to calculate this web elimination. And then the other thing that you should note is the Israeli Bituach Leumi would not have been considered an Israeli pension under the own law under a case called Greenberg versus Colvin. Here is the substantial earnings chart. It shows each year what you made, which would be considered substantial earnings. For example, in 2014, if you made $21,750, that would be considered substantial earnings, and that would be 1 year of coverage. The next issue I want to talk about, we're going to go back to income tax, is taxation of U.S. Social Security. Because of the treaty between the U.S. and Israel, both in Israel and in the United States, Social Security is exempt from taxation. Usually, if you live in the United States, there's a formula if Social Security is taxable. But because since you live in Israel, on your U.S. return, the Social Security benefits are not taxable. It's an amazing benefit. The next issue I want to talk to you about is your taxation of Bituach Leumi and the old age benefits. In Israel, this benefit is not taxable. In the U.S., there are various positions by professionals whether this is taxable or is not taxable, and you should consult with your tax advisor to see what their applicable position is. The next issue I want to talk to you about is the sale of a personal residence. And a lot of time, when people retire, they sell their house. In Israel, depending if this is your only residence or not, all or a portion of the gain may be taxable or may be exempt. So you should consult your advisor to determine if this is what is applicable for you. In the U.S., if you meet the residence and ownership requirements, whether you've lived there and owned it 2 of the last 5 years, you may be able to exclude a portion of the gain up to $500,000 if you file married filing jointly with a U.S. spouse, or if you file married filing separately, you have a $250,000 exemption. Now, let's say you own this house with your non-resident alien spouse 50-50, then half the sale will be attributed to you, and you'll get the $250,000 exemption. Issue number 6, a redemption of a Kupat Gimmel or Keren Hishtalmut. How is that taxed? In Israel, a lot of times, most of the distribution will be exempt from taxation. And if you are subject to tax in Israel, there'll be withholding tax at source. In the U.S., this distribution is taxable, and you'll get a credit for the taxes paid to Israel. Now, the amount that's taxable depends on the employee contributions, which those will be tax-free, and the remaining portion of the taxability really depends on if you've reported the employer contributions on your U.S. returns in past years and also with the employer growth. Next issue I want to talk about is investing in a Kupat Gimmel Hashka'a. The Israeli taxation is that it's tax deferred until you take out. For U.S. persons, it's considered like a PFIC, and you may have substantial tax obligations. A PFIC is like a mutual fund, and the U.S. has punitive taxation on that. Also related with that, if you decide to invest in Israeli mutual funds or Israeli ETFs, that also is considered a PFIC and has punitive taxation implications. You should consult with your tax advisor if you're invested in these kind of investments, because it can be have some pretty harsh tax consequences. The next issue I usually see is people who retire usually will have extra money and decide that they want to invest in real estate. In Israel, the taxation depends on your situation. It could be that it may be exempt from taxation, or it may be subject to 10% tax or ordinary tax. It all depends on what type of real estate it is, if it's residential or commercial, and how many real estate properties that you own. In the US, if you have rental income, it's subject to ordinary taxation rates, and you can take all the expenses that you incur and take them as a deduction, and you'll also get a credit for any Israeli income taxes that you've paid. Next, let's talk about what's if you have a US retirement distribution, such as an IRA, a 401k, or a 403b. In Israel, this will be taxed at the same rate as it would have been as in the US. So what you do is you calculate the tax in the US, and you will give the tax to Israel, and you will take a credit for that on your US return. In Hebrew, it'd be called a Gimmel, and that's the code section in the Israeli income tax code where it applies. And because of the treaty, it gives the first right to taxation to the Israel, and then the US return, you take a credit for the Israeli taxes you paid. If you have a US source pension that's either a federal, a state, or a municipal pension, that pension is exempt in Israel because of the treaty. It is taxed in the United States at regular rates. So for example, if you have a pension for the US because you were in the military, that will be taxable in the States, but not taxable in Israel. A lot of times, the next issue I want to talk about is I see people who retire and decide that they want to become self-employed. So there are a good number of issues with people who decide to become self-employed in Israel. Let's talk about the Israeli taxation. You will need to report annually to the Israeli tax authority in most situations, and you're going to have to keep proper books. And it's not like in the States where you can keep your books on Excel. There are specific procedures that you need to do, and you need to make sure that you're being guided by a professional that can help you to make sure there's no accidents, because sometimes the Israeli tax authority will ask to see your books, and if your books are not in a proper manner, they will hit you with fines and penalties. You'll need to file an annual return. In addition, every couple of years, we'll need to file a capital declaration statement, which in Hebrew is called a hatzara hon. It's such like a personal balance sheet. So for example, at the end of December of this year, they'll ask you for a hatzara hon. And then let's say in another 5 years, it's totally random when they ask for it. They'll ask you for a second capital declaration statement, a hatzara hon. What they're trying to see is if your financial position makes sense between the first capital declaration statement and the second capital declaration statement. In the US, your self-employment earnings will be taxable at regular rates with a credit for taxes paid to Israel. One thing you need to know is you're going to have to pay Social Security of about 15% to the United States. You may also have to pay an additional 15% Social Security tax to Israel, depending on your situation. In other cases, you may not, but it's important that you get proper advice to make sure that you plan that you're going to have to pay 15% to each nation in addition to paying income tax. The next issue I want to make sure that you're taking care of is reporting both to the US and Israel if you're required. Generally, in Israel, most people do not have to file a tax return if they're just a salaried individual, because the withholding tax at source is taken from your wages. And let's say you have investment income from Israel, and let's say in one of the banks, they withhold tax at source. However, you do need to report to Israel if you're self-employed, if you're a corporate shareholder, if you're a highly compensated salaried individual, and that threshold changes every year. Those who receive severance pay, and sometimes you can have your severance pay split over a number of tax years, and those who have income from abroad. Folks who fall into these categories need to file Israeli return on an annual basis. U.S. citizens or green card holders have to be filing U.S. returns on their worldwide income. And in addition to filing a tax return, there's another return called an F-bar, where you have to report the highest balances in your non-U.S. bank accounts, investment accounts, employee benefit accounts, such as Kupat Gimmel, Keren Hishtalmut, Bituach Leumi, or pension accounts. So those are basically the employee benefit accounts. Also, in addition, if you have signature authority over someone else's account, for example, if you're a volunteer for a nonprofit organization and you have signature authority over the bank account, you also have to include that on your F-bar form. And there's a special section where you declare that this is what you have signature authority over, but it is not your money. Next, let's talk about the US-Israel tax treaty. The US-Israel tax treaty defines which country has the first right to tax, the second right to tax, and sometimes the only right to tax. So let's talk about a couple situations that commonly happen for individual taxpayers. For example, US-sourced interest and dividends, the first right to tax is to the US. On your Israeli return, you'll tax your U.S. interest and dividends, but you'll get a credit for the U.S. taxes paid. For example, let's say you paid 10% tax on your interest to the United States. In Israel, the tax is 25%. So you will pay 15% to Israel with the 10% because you've taken the 10% credit. On U.S. source capital gains, the first right to tax is Israel. So for example, let's say we have a stock that was sold in the U.S. On your Israeli return, you'll pay 25%, and you'll take a credit on your U.S. return for the 25% that you paid in Israel. U.S. Social Security, that'll be exempt in both countries. A U.S. government pension will be only taxable in the U.S. and not taxable in Israel. A U.S.-sourced retirement plan, the first rate of tax is going to be to Israel, with the U.S. giving a credit for Israeli taxes paid. One other thing that we commonly see is, let's say someone has real estate for the United States. The rental income is first right to the United States, with Israel giving a credit. Also, if you sell a piece of property in the United States, the first right to tax is to the U.S., and you'll get a credit on your Israeli return. If you pay state taxes to the U.S., that's also included as creditable on your Israeli return. If you pay city taxes in the United States, that is not creditable on your Israeli return. Thank you for listening today. Hope you enjoyed, and if you have questions, you should seek proper advice.